Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's take a look again on the Forex market. So, in fact, in the recent few sessions, we have made the suggestion that market should keep going lower. And so there are a few reasons were for that, and actually not only on euro currency but on the cross-market analysis. Some traders on X platform start speaking about the unexpected dollar rally. But in fact, it is not quite unexpected because actually we have found reverse hand shorts there in the beginning of the week, but even earlier it can't be called as unexpected if you take a look on the monthly chart. Euro has reached the major OP target 2 months ago. So you can't say that reaction will be unexpected. But here is also could judge about the scale of the reaction, right? So despite that this has happened almost in the beginning of the September, you could see that almost 2 months is taken before some reaction has followed. So it just shows the scale how long situation is developing on the bigger charts. And it seems that now we have to recall some big patterns that we have. For example, on the euro currency, it's time to recall the free drive, right? So recently we talked that market hasn't started any action within the second week in a row, and we said if it will last for longer, for more 2-3 weeks, it might be a sign of the rising bullish dynamic pressure. But you can see that hasn't happened, and market starts moving down. What does it mean? It means that if this pattern will work as it should, market should take out 114 lows, even slightly lower, so 113.86. So I just call it as 114. So it's minimum target. It doesn't mean that market has to stop here, but it should be reached. The similar picture, very similar, we see on other markets. For instance, take a look at the Great British Pound. If you take a look also at the weekly chart, we do not have here the free drive, but the overall performance that we have, forming the bearish reversal week, forming some kind of the ABCD type of action right in the top of this long-term trend line resistance, suggests that it might be dropped down to the 130.50. which is also significant. And on lower time frame indicable, you could see lots of signs. So on the daily chart, this is big hand shorters pattern that we talked about. It's the same ABCD pattern that you see that's going with it. So probably we do not need it. And just show you the better picture, right? So market is dropping out of this widening triangle. We talked about this, considering these head and shoulders first. And you can see that market has given us second confirmation with fast acceleration right down. So next target here will be around 132 area, which is actually very close to the potential neckline of the big pattern. So 132, it stands approximately in these points. It's on the Great British Pound. Here's with our small hourly hand shorts, you can see it's already dropped to the 1618 extension. Why it is also important, just because if you take a look at the overall shape of the price, you can see there's really strong acceleration on the cable, on the dollar index, on euro currency as well, some acceleration. So it leads to the points that market actually has completed near standing targets. First of all, on the dollar index, you can see market is down with this ABCD pattern that we discussed, and actually if you take a look in the euro, also same target has been completed. Well, here is maybe we are not quite correct with taking this point as the top, because probably this one should be taken. But well, currently I think that it's more proper point, because actually here's downward action already starting, and that was some reaction on the big data release, which is actually makes for me these points more reliable. But anyway, if you choose this point as the top, then ABCD will be finished around 115. Anyway, with all our targets that we are discussing and the big patterns, 115 probably also might be taken out at some point. But for now, you can see that market stands at the support. Some kind of the ABCD is completed, but if you do not like it, just rely on the butterfly pattern. 1618 target, as we said, will be next destination point around 1560 area. Now it's also done. With this pattern, you can see that straightforward acceleration from the 127 to the 1618. It means that most probable, when you see such an action, at most probable that butterfly will give us only minor reaction, only minimum necessary reaction to treat this pattern as a completed. Usually this is the 30% retracement of the downside action of the butterfly. then probably a downward reaction could continue. That's just the consequence of this fast action. At the same time, you can see market stands not only on the butterfly target, but on the daily chart, it stands around conference, 1590. It's conference support, and today probably we could count on some retracement. So that's definitely not the point for taking any new short positions. On the hourly chart, you could see what particular levels we could consider. First one is already touched, it's 115.18. Next one, which is more reliable, stands around 116.10. It's probably that's more reliable level for possible concern taking the short position. It's in a similar way as we traded the 1650. This market retested the previous bottoms, showing the retracement in 30%. This was the bread body trade. Here's might be the same, but in this case we're choosing a bit higher standing level, just because market on the conference support and the previous lows was also around 1610. So for now, I think that we need to wait when the market will reach this level, and then we will take a look what's going on and make the decision whether it makes sense to take the short position right here, or we will wait for a bit bigger retracement, higher retracement. So that towards what we have. Let's keep watching and probably return to the subject on the weekend and next week, because there's already Friday, and actually maybe it's not a good idea to take in the position for the weekend at all. So that's all for now. Bye.